Around. This is Taking Stock. I'm Michael McKee, sitting in for Pim Fox. Manufacturing in China also grew at its fastest pace in almost a year and a half in August. The official Purchasing Managers Index there rising to 54 from 53.3 in July. A report from HSBC also showing growth. The report prompting speculation copper and lead, the two best performers on the London Metal Exchange this year, will rather rally further. George Gero follows commodity prices at RBC Capital Markets. And George, I want to welcome you.
Thank you.
Talk about the metals, although I have to start with a different one, gold.
Sure, yes.
Interesting day today. You're pointing out to me that gold and the dollar both finished up, and as people who watch the markets for a long time, that rarely happens.
Very confusing. It's sort of a most interesting thing. Haven't seen that, I think, in quite some time, maybe an occasional day or so. But usually when the dollar is doing better against the euro, gold sells off. And, of course, crude sold off today, too. The stock market had a triple-digit down. And so the dollar became a bit of a haven because if all the financial stocks were down and the yield-bearing things were down, well, people moved back into gold. And while they had the dollar, they were happy that they were both up today. It's very unusual for a trader to look at that.
And that's in part because London was closed yesterday. The opportunity
Yes.
to buy gold was really in the United States.
Well, yes, we did have some Far East selling this morning in copper and some of the metals. That was a carryover from yesterday's close in London, and of course COMEX does very well with that. So there's been some belt tightening, and you notice that the spread for nearby copper to further out copper, say from September through the December delivery, has increased from 125 to 250 points, which means the nearby is not as desirable for deliveries as the further out when they think that the Chinese will resume taking deliveries.
Now, the Chinese built up a huge stock of copper, I understand, while prices were low, so it may be a while before they go back into
Well, it could be, but then, of course, you have the storms coming. You have infrastructure needs in the U.S., and then, of course, all these shovel-ready projects, TARP money hitting in the fall. So, of course, you really don't want to be short copper.
And yet, as another sign of confusion today, on the COMEX at least, copper finishes down. How come?
Well, everything had a bit of a selling and take money off the table tinge to it.
Which is kind of interesting given, as you mentioned earlier, the housing numbers are better. Usually when we get good housing numbers, copper rises.
Well, this was not housing starts. This was housing resales. And yes, that's better perhaps for the economy, but we need housing starts. We need new infrastructure projects, which may not happen for months.
Now, what are we going to see in terms of copper? Where does it go from here and how quickly? You say the out months, certainly the price is expected to go higher, but how soon
Yes.
do we get there? And does that start to move down the curve?
Well, I think you can probably start to see that going forward by the end of September, maybe October. And September is going to be a tricky, very tricky time for gold. You have the sales pact of the ECB, where they want to sell 500 tons as they do each year. And then you have the IMF pushing Congress to okay selling 403 tons of gold to raise funds for the IMF bonds and projects. So September could be tricky for gold as well. Although in the long run, with all that monetization, we think gold is going to do a lot better.
Well, copper, $2.8185 a pound. It closed today on the COMEX. So what's the price target in the near term? How much higher can it go?
Well, that depends a lot on what happens with the storms, what happens with other buyers of copper. It's not only China that has been buying copper, but other countries. And of course, you have to look at the whole world. This spending in order to help the economies isn't just the United States, it's Western Europe as well.
Mm-hmm. When we were seeing the last boom, we saw a lot of the base metals rally, fall back, rally, fall back.
False starts.
False starts. What are we going to see now in terms of, say, metals like lead?
More volatility. And I think that more volatility will be brought about by the automobile industry figures. Suddenly they may improve, suddenly they may use more batteries, and suddenly people are going to say, you know what, I may need lead.
So there may be some plays beyond lead, too, if it's the automobile industry, chrome, and then you get out of the base metals, you get into things like platinum used in the catalytic converters.
Well, platinum is used not just for catalytic converter. I think a lot of people don't realize platinum is used to crack, or that is split, crude oil into heating oil and gasoline. So if we have more need, the oil companies also use platinum, although they've been recycling platinum and buying a little less of it.
So what's your best metal pick right now? If base metals are going to be very volatile, it's going to be tough for the average investor to play that.
I think palladium. Palladium probably could benefit from some problems that may be developing in Russia in delivery. Palladium is certainly a lot cheaper than the other metals. And if we're going to have a lot more diesel engines in the fall, we may be using palladium for catalytic converters as well as platinum.
I know we did a report about a year ago on people using palladium for wedding rings as a substitute for platinum. George Gero, thank you very much. Always great to have you.
Thank you for having me.